Peace and love, good people. Peace and love. Welcome back to Money in Minutes. This is a video where I want to discuss why it's important to manage your winners and to fire your losers. You have to get those losers out of the way. You have to learn to cut the play. All right, and this is particularly why. So I got into this trade at the end of the previous day on January 20th, 2026. I entered this play in the afternoon, closer to close. It went against me. And I decided to hold the position because the expiration date was still 72 hours away. So I still had some time for the play to recover. All right, so we opened up in the trap zone. I went ahead and still added, I filled in the gap, which is something that we do on this channel. And because I'm stuck between that 200 period moving average, a level of resistance, and the 21 period moving average, I'm trying to see how far up this play can go where I can recover some of my losses. So it closed at negative 94. The next day, it had went up to like 124 at 9:30 when the market first opened. Now it has come back down to $100. My max loss per day is $100. So what I was able to do was, I'm like, okay, instead of me having a new opportunity to enter a new trade, I'm managing this loss. And as you can see, managing this loss cost me the open, because now instead of me entering a new trade, I want to put my time and energy into doctoring this one up. All right, so part of the issue with this is that I'm already beyond my max loss per day. So I'm already violating my rule. I should cut this play. I should have cut it yesterday, because you don't have to reach your max loss to cut the play. If your max loss is 100, you can still cut the play at 80, 90. Anytime you waiting around, you're hoping. All right. And hoping is costly. It's very expensive to hope. Hope is as expensive as time. So another part of this play that's frustrating is the fact that I spent time watching it, waiting for it, and because I was so focused on the P&L and reducing this loss, that I didn't pay close attention to where we were and what was happening in the current moment. So what ultimately ends up happening is we break through resistance. And you have to remember the rules of support and resistance. The rules of support and resistance goes as follows. When you break through resistance and hold above resistance, the resistance level becomes support. And when you break below a support level and hold, then the support level becomes a new resistance. So as we continue to move up, and as I continue to regain and recover from this loss, I focus on scaling out of the play, keeping my loss below $100, but I'm not paying attention to what's happening in the moment. So right here, we're getting a bull flag. A bull flag is slowly emerging. A bull flag is slowly emerging. So with the bull flag, we get a move down, like that pullback, and then we get a pop up towards a new high. So as you can see, that I'm in two contracts on this particular play. So I haven't really been masterful enough to say, okay, well, while I'm waiting for this to come down, let me get into a put going the other way. I'm just sitting back, being patient. Like I said, that bull flag happened, so I'm anticipating a new high, but I'm also anticipating a failure at a new high. So I'm just focusing on, okay, once we get past 680.46, that's probably going to be my new high. That's going to be where I'm able to get out of this play, and hopefully I will be below my max loss per day, which is $100 on two contracts. But what I'm not paying close enough attention to is that we are moving up, that the 21 period moving average is pointing up, and that we are squeezing between. So this is actually a wedge is forming. Although I'm looking at this small bull flag, there's a bigger move being made, which is a wedge between the 21 period moving average, this gold line, and the 200 period moving average, the red line. So as that squeeze is happening, I'm not focusing on the concept of breaking through resistance and resistance becoming support. Otherwise, I would have been looking for a powerful move through the 200, looking for that thing to hold above the 200 and then have some continuation to the upside. But instead, I was looking right here to say, okay, we hit resistance and got rejected. So now I'm like, okay, if we go back to that resistance level, that's where I'm going to take profit at, because I'm focused on getting out of this play, managing this loss, and I'm not being mindful of what's happening now. I'm just caught up in being down this much money on a small account. So I'm looking for ways to recover from this loss. And that is not what you want to do. You want to manage your winners. You want to be up and looking for an opportunity to add contracts. And right here, this is the moment where I should have known. When we got this bullish reversal, when we have a big green candle wiping out this huge red candle, this is when I should have said, oh, we're about to take off. This is going to be easily a $1 to $2 move up. And this power should give us the power we need to break through resistance and continue to the upside. But instead, and this is the second, like almost like the second or the third, this would be like the third leg, because we got that first gap up, then we touch the 680, the white line, then we pull back, then we have a second push, then we pull back, and now we're having the third push. And you got to remember, the third time's a charm. So now we're about to go boom and break through this resistance. We're going to break through the roof, and the roof is going to become the floor. We are going to break through the roof, and the roof is going to become the floor. But instead of me having confidence that I'm going to truly reduce this loss or I could become profitable, I just sat back and waited and looked for an opportunity to get out of this position. So I basically lost the morning. I lost an opportunity to trade the open by focusing on managing a losing position. Now, what do they call it? A twist, a plot twist. This play ended up running from 680 back up to 690 well before this option would have expired. So had I been focused more on day trading or even swing trading instead of scalping, this loss would have turned into a win. And for some people, being down $120 on 2 contracts is well within their max loss. But for me, for my account, my rules, and my strategy, that wasn't a good idea. So as I start to believe that this is going to be a bearish reversal, now I'm looking at getting out of this. Like, let me scale back. Let me cut one of these 2 contracts off at $50, which is about my max loss per trade. All right, between $50 and $60 is my max loss per trade. So boom, I got out of there within the confines of my rules. But now I'm looking and saying, wait a minute. If you look at that second move up from where that green candle took out the red candle, we're still in the top third. So remember, if we stay in that top third, then it's likely that we're going to continue to the upside. So not only are we at the top third, staying in the top third, we've also broken through 680.80, which has been a level of the top layer of a gap that has recently been filled. And we have a Marabozo, a power green candle bursting through the 200 period moving average, following that with a tail bar. So these are all of the reasons why, all of the signals and signs that we're going to continue to the upside. And I ended up cutting the play for a total loss of $100. And then this thing ended up running up another $10. And I had at least a 20 delta. So that would have been potentially $200 to $400, depending on how that delta would have moved. More closer to $400 had I rode it up the whole way. But again, it's not about the what ifs. It also could have continued to the downside and we would have lost money. So remember, manage your winners, not your losers. All right. It's more rewarding and less expensive. Peace and love. Please subscribe to the channel. Visit stockmarketdaddy.com and take the assessment for problem gambling. And I'll see you in the next video. Please like this and comment down below if you prefer these videos or if you have a better experience watching the chart code. See you in the next video.